The most aggressive market movements don't start with a sudden headline. They are mathematically engineered in plain sight, perfectly timed for when the public is looking the other way. Right now, the broader crypto ecosystem feels quiet. Capital is moving sideways, volume is flat, and retail interest has largely drifted away from the charts. But beneath that surface apathy, a glaring anomaly just triggered. Shiba Inu quietly broke away to set its first new local high in months. The price broke decisively above its upper trend line, tested the 20-week moving average, and executed a clean bounce. Pulling back to mid-February reveals the structure. This highest close since the first quarter cements a rigid sequence of rising lows. While the rest of the market remains flat, this specific move suggests that capital isn't leaving the ecosystem. It is becoming more selective about where it settles. To see what's actually driving this, we have to look at exchange supply. This is the easily accessible inventory sitting on public trading platforms, the tokens available for everyday retail investors to buy. Over the past 7 days, the market recorded a massive data anomaly. Exactly 374 billion tokens were completely removed from those public exchanges. This bar chart tracks the 7-day drop, driving total public exchange reserves down to 82.31 trillion tokens. Against the total circulating supply, only 14% remains liquid on exchanges. The remaining 86% is held elsewhere. This rate of inventory depletion creates the structural conditions for a supply shock, where even a modest increase in buying pressure meets almost no liquid resistance. So, if hundreds of billions of tokens are vanishing from public access, where exactly are they going? They are moving into cold storage, an offline digital vault utilized by whales and institutions to lock away the assets they intend to hold long-term. We saw direct evidence of this yesterday, when a single entity withdrew 134 billion tokens directly off Binance and buried them in one of these offline vaults. This data gauge plots institutional wallet positioning according to Arkham Intelligence. It reveals that smart money wallets are currently sitting 72% net long, positioned for upward movement. Simultaneously, the underlying network infrastructure is running at record levels. The Shibarium network just crossed 1.12 billion total transactions, reaching peak utility just as the supply is being pulled. The data shows hundreds of billions of tokens moving to offline vaults at the same time the underlying network hits record transaction volume, aligning the network's utility with the behavior of its largest holders. Which brings us to a paradox. If supply is crushed, wallets are at all-time highs, and whales are hoarding, why hasn't the price already surged? Because the equation is missing its final ingredient. Retail demand for altcoins has been dormant for months. This area chart compares available market supply today against the accumulation phase in September 2023, showing an exact 50% reduction in inventory. Back in 2023, the price exploded when demand hit, with twice as much supply available to absorb the buying pressure. Now apply that math to today. When retail demand rotates back into the market, the supply they attempt to purchase simply won't be there. Large-scale holdings have spent months building this state of structural scarcity. The only question left is what happens when a new wave of demand finally collides with